So the plan for this video is to simply just talk about my top 5 favorite high dividend stocks that I own. And if I come over to the dividend side of my portfolio, we can see all the names that I love. The thing is, I don't love them all equally. Now, I have talked about all 3 of these companies before on the channel, but I want to put it all into one video of my top 3 favorite stocks and give you a quick synopsis on each one of them. So where to begin? Let's begin with a company that I actually don't hold, but it's one that I love, and if I do change my portfolio in the future, I will be introducing this company. If you're not from New Jersey like myself, you might not be familiar with this company, but it's Public Service Enterprise Group, and this is a major utility in the state of New Jersey. And aside from just being a utility company, this is, I think, one of the most stable dividend paying companies there is, and they're in the middle of transitioning to becoming a green energy utility, much like NextEra Energy. And NextEra Energy is the stock that I currently hold in my portfolio, and in the future I might be changing it out for this if there's a good opportunity. And there's lots of reasons for this. So NextEra Energy is way more expensive, right? This is the go-to green utility company. Everybody invests in it, and it has a forward PE ratio of almost 30. So that's way more than the market, which is like 21. So this is an expensive company. And something else I don't like about this stock is the payout ratio. I know it's a utility company, but it's a little bit on the high side, especially with the immense dividend growth and the flat revenue of this company. We can see the revenues right here, and it's just not super growthy, especially considering how expensive of a stock this is. And that's why I think PEG is a much better alternative. They have a forward PE ratio of only 17.5 right now, so it's relatively cheap. And on the surface level, all the finances, they look pretty okay. There's no major red flags, but it's a company that's been around for a long time. It's very stable. If we look at the dividend data, the payout ratio, it's less than NextEra Energy, and it has a much higher dividend yield. It's given a 7 out of 10 rating by this website, with a strong buy consensus. Bloggers are pretty bullish on it, and the news on the company is neutral. There's not much news that happens with this company, which is a good thing. It's one of those situations. But to understand why I love this company, we have to go beyond the numbers. So this article does a good job, and I want to read just some highlighted segments. So first, the summary. PEG is transitioning into renewable energy and making great strides in doing so. It has rewarded shareholders with dividends for 114 years and is poised to continue doing so. That's what I meant in terms of this being a very stable company. And it currently trades at a 7% discount to fair value. So like I said, it's pretty cheap. Now I'm going to read just some of this to paint a picture of what's going on with this company. So as the trend towards renewable energy continues to gather pace, renewable sources will eventually edge out coal, and Public Service Enterprise Group has taken the wise decision to embrace the change rather than being swept away by it. To that end, the firm has embarked on a clean energy future program. It has committed $1 billion to this. $707 million to an energy cloud investment which will facilitate superior grid management, $166 million to electric vehicles covering residential smart charging, level 2 mixed-use charging, and public DC fast charging. In addition, they have acquired a 25% stake in Ocean Wind Project, which may provide up to 1,100 megawatts of clean energy. So lots of investments in renewable energy, even EV infrastructure, the grid overall. Really impressive stuff. And the last bit that I want to read is down here on the business model and the competition. So it says, it is cost prohibitive for customers to switch providers because utilities are kind of like that. So that's a huge advantage. The asset-heavy infrastructure of a utility grid keeps prospective competitors at bay, leaving established players free to continue making profits unencumbered. So that's the situation PEG finds himself in. They're investing heavily into renewable energy with a lot of offshore wind projects. They're setting up EV charging infrastructure and upgrading the existing grid to handle more demand. And in terms of competitors, it's almost impossible to get into the regulated utility business, and PEG has been paying shareholders that dividend for 114 years. So all that together makes me very bullish on PEG, And like I said, I might introduce it to my portfolio if I see a good opportunity. The next company on the list is Broadcom. I just talked about this company with a lot of detail in my last video on the best high dividend tech stocks, so definitely watch that if you haven't. But this company is really something special. It has a 10 out of 10 rating by this website. Strong buy, bullish all around, a lot of momentum, and this is a semiconductor manufacturing play. In fact, we can come over and look at their revenue by segment, and we can see they have two major segments. The first is semiconductor solutions, and the second is infrastructure software solutions. And if we come to their actual website and look at their products, we can see how they're split up. So they have lots of storage, wireless, optical products like camera sensors, mainframe software, security. So it's a pretty large focus on very necessary industrial kind of processors. And lots of major companies rely on Broadcom to be their supplier. Companies like Apple, Nintendo, IBM, Dell, all these companies source their semiconductors, or at least part of them, from Broadcom. So that's a lot of steady, consistent, and growing demand from high-end companies. Their financials are just on another level. It's kind of beast mode activated. It's a very strong company, and they're committed to returning profits to shareholders in a way that most companies aren't. So for a technology company, their dividend yield is 3%. That's very high. Payout ratio is a healthy 50%, and they're growing that dividend the fastest I've ever seen a company grow a dividend. Not to mention their forward PE ratio is 17.4, so cheaper than the general market. So I think this company is just a win. And that leaves us with innovative industrial properties. This is a REIT, and right now it has a 9 out of 10 rating. The sentiment is bullish all around, and there's lots of momentum. Now, this REIT is in the medical marijuana industry, so they don't produce any marijuana on their own. They just have all the infrastructure needed for producing medical marijuana, and they lease out those properties to those companies that then produce the product. It's relatively similar to like Realty Income, which owns all the properties and they lease it out to their tenants. So I like this business model. It's very safe, and they also pay a hefty dividend because REITs, by law, to avoid double taxation, have to pay out most of their income in dividends. But to understand the immense growth and future potential of this company, we have to look at some of the statistics behind medical marijuana usage in the US. And the first one is this. So what is the expected market size of cannabinoid-based pharmaceuticals in the US from 2020 to 2029? And I mean, there's not many industries that have this much growth in them. This is insane. What is the current and upcoming sales of legal cannabis in the US in billions of dollars? And we can see the exact same trend going on. And another one I wanted to point out was this one. Here is the current and expected medical marijuana retail sales in the US in billions of dollars. And they give you a minimum and a maximum, but overall, once again, the trend is very clear. And because of all those tailwinds, this stock has been performing amazing. In the past year, it's up 127%. And if we look at the financials, it is experiencing the beginning of exponential growth. So if we look at the total revenues, look at just the exponential nature of this and how it's just beginning. The net income shows the same exact story, the beginning of exponential growth. And the dividend is just under 3%, but it's only coming down the dividend because the price went up 127%. So there's that inverse relationship, but they're trying to keep up with it. If we look at the dividend growth rate, this is very high. It's right up there with the Broadcom, which is super established. So this is another company that loves paying cash to shareholders. So those are my favorite top 3 high dividend stocks right now. I hope you guys enjoyed the video. If you're still watching and got something out of it, give the video a like. It helps out the channel a lot. Subscribe if you enjoyed the content. But regardless, I will see you in the next one.